Welcome back to This Week in Carbon, the #1 podcast in the world for carbon markets and climate finance. I'm your host, Eddie Smith, and it's a pleasure to moderate today's discussion. Today we have with us Andrea Rumignani, and as usual, we have our weekly bestie, Rene Velasquez. So I want to thank Andrea for joining us
give him a
today.
score. Andrea, give him a score for how he
Is that
pronounced your name.
Honestly, I was just about, I held my tongue how many times he had actually to
No.
pronounce the name to come up with the right pronunciation. Really, like kudos.
Did I get it right?
Yes, you did. You know that about 12
Awesome.
years in my finance background in London, no one's ever been able to communicate. It was either Rumignani or it was Rumignani or anything like that. So yeah, very good.
Yeah, well, that was my
It is a
first
difficult last name.
couple shots. Yeah, well, regardless of your difficult last name, I want to thank you for joining us today. And yeah, we've got some good stories, and I've got actually a good amount of topics to cover. So
yeah,
I want
I've
to dive.
seen it.
Yeah, I want to dive right into it. Starting with a major story this past week, which is that the big banks scaling back sustainability leadership amid climate policy uncertainty. So the finance industry is obviously a critical player in driving the net zero transition. However, in recent moves, the global banking giants suggest that momentum may be stalling, right? So HSBC, Standard Chartered, Barclays, Wells Fargo's are all downgrading sustainability leadership roles and shrinking dedicated sustainable finance teams. Some CSO roles are going unfilled, while others, they're kind of shifting and merging them into broader finance and risk management roles. And I think this shift reflects sort of a broader slowdown in the environmental sustainability and climate finance action at bulge bracket banks, and with them citing lower than expected energy transition progress, shifting political landscapes and regulatory uncertainty. So, I think what's really the key drivers of this retreat? Is it client demand and market realities, financial pressures and profitability concerns? I mean, European banks are kind of taking a wait and see approach, reluctant to commit any resources when policies and client strategies remain in flux. So I guess what are your initial reactions? And yeah, I'd love to hear your thoughts.
So first of all, I think a great question. So I think the first thought that popped into my head is it actually remains the one sector within investment banks or the banking industry itself that has been growing consistently is and will continue to be compliance. So some people might have thought it might be sustainability, but no, compliance will still remain the key driver of of people being hired. I think it's very much expected. So it's not I mean, banks at the end, they go and they need to reassess themselves of where business is moving towards. Business, especially within sustainability, anything that has nothing to do with regulatory requirements, nothing about EUAs, it's more on a voluntary basis, is receding. We got RE100 companies that have been restructuring, pushing out tenders, reducing their workforce and sustainability, and all that is very much entangled with where we are seeing yield curves. Where we're seeing capital costs and as such, profitability of companies is not anymore something that was a given when money was really cheap for 12 years. So it doesn't come really of a surprise. I think the banks are the ones that will be able to shift very dynamically. This is more of a reflection of where corporate response is.
Yeah, and I like what you said about compliance, right? I think would you be able to expand on that a little bit? What you mentioned there with compliance mechanisms
Yeah,
driving
of course.
the
I mean, look, compliance is is a double-edged sword, right? So on one end, of course, it's the lack of compliance led to the financial crisis in '07, or was one of the main factors, because people, or let's say banks, and especially banks, were able to invest with their own balance sheet into dubious assets and resell them and repackage them into to their and sell them to their clients. So of course that has sort of stopped. But on the other end, the growing amount of compliance, the regulatory requirements, especially from the European Union, also is a cap to growth. If you look at a wonderful article from the Financial Times by Mario Draghi, I think it was last week, he's actually mentioning that the real enemy, everyone's talking about Trump and how his tariffs are actually hurting the European Union. The first tariffs that are actually hurting the European Union are all the compliance factors within the European Union itself. That has been capping growth materially throughout the course of the past 15 years. So compliance can be in reality very much a hindrance to growth and dynamic change.
Well said, well said. Rene, do you have any thoughts on this?
Pretty tough
Can you add?
and hard act to follow. So thanks, Andrea, for that. No, I mean, look, it's interesting. I think, you've highlighted a number of issues, Andrea, and also Eddie in the preamble. Essentially, banks changing in terms of their focus and their lens, and certainly with regards to their comms. But then, as you mentioned, a number of banks have actually unwound sustainability teams. To Andrea's point, yeah, the focus is on compliance. That's where they see growth. Sustainability for most banks is now seen as potentially not a revenue generator, and potentially even as a cost sort of sector or component, let's just say, within the banks. But I don't think it's completely, like binary, right? And I'd love to get Andrea's take on this. And I remember reading a story just earlier in the week. I think it might have been yesterday or today, but effectively Goldman has a $750 billion facility, right, that they're putting towards sustainable finance. Despite all the DEI cuts, et cetera, they're really making some progress. And they actually continue to ramp up with regards to financing the energy transition. So that tells us that the energy transition is underfoot. Certain components therein, maybe the focus pivots to just the loan books and the core parts of the bank, and then staying within the guardrails. Andrea, what are your thoughts?
Sorry, then first of all, when I meant compliance, I'm not talking about compliance, carbon, or ESG markets.
No, I think I understood that. You're talking about compliance, staying within the rails of what the regulators are telling them.
Yeah. Okay, so that was if and I would agree with you entirely. I think the reduction of sustainability teams is very much a momentary blip. If you look at various pockets of capital, if it's Goldman or general funds, or the European Union is now looking to put together their own sort of funding, similarly to the US, to look for energy transitioning opportunities. I think there will be more capital, or still is going to be more capital to be deployed into energy transition. I think this is a long game, and frankly speaking, we are probably looking right now at a blip of diminishing interest that is very much entangled to macroeconomic activities. And at the end of the day, people need to remain profitable, especially banks. And they can rehire individuals within 6 months, and so that shouldn't be a problem for them. But I agree with you, Rene. I think on a long term, we're seeing that a lot more capital is being devoted to ESG and energy transition.
Yeah.
Back to you, Eddie.
So more of a temporary slowdown than a shift away, a deeper shift away from sustainable finance and climate finance. I mean, the big banks, it's been a big business for sustainable debt capital markets. Some of the bulge bracket banks in the US have been some of the largest underwriters of green bonds and environmentally linked bonds and sustainability linked loans. So it's been a lucrative business from the sustainable finance side, but I think the internal sustainability teams are, obviously just the ESG kind of internal, the DEI, that's kind of taking a big hit with this temporary slowdown given the administrations. But
Yeah.
Yeah, I mean, Trump is obviously not helping.
Yeah.
And the fact that
Yeah.
I'm actually having conversations with people and saying what they believe in, I think we're walking away from what is a believe or not. You can believe in God. You can't start believing in in what is actual fact.
Yeah.
So this is there's a bit of a parallel reality that we have been seeing, and quite frankly, it's sad to see that we're just 4 weeks in of a
Mm,
4-year presidency. Yeah.
It's never boring with the
yeah.
Trump administration.
No, it's never boring at all.
Can I?
It seems like a telenovela.
It is like a telenovela,
Yeah,
exactly.
every day there is something. So you very much look forward of what's going to come next in the next episode.
Definitely. Can I add some color commentary
Please.
on this? And so I think no, completely agree. Firstly, let's get the kind of business part out of the way. With what you said both, but particularly Eddie, what you just basically referenced, essentially, the separate sustainability teams within these large banks, I think, it doesn't make so much sense, and certainly under this climate. Let's put that to the side. But I think that they're being integrated into the actual functions of the banks themselves. And as you said, there are
Oh,
really
that's
bright spots
interesting.
with regards to sustainable finance. So I think that that's something that we need to keep an eye on and watch, because effectively there's a financial imperative, as Andrea said, in that component. I think with the regards to the layoffs or the downsizing of these teams, there's an element, and this one I'm just going to lob the ball to Andrea because his pronunciation will be a lot better than mine, given that he grew up in Germany. But it's a relative sort of Schadenfreude, right? Effectively taking pleasure in the sort of the pain of others,
Mm.
and that there's. I think the reporters are just looking for stories where they're saying, see over here, pain and sensationalism to a certain extent. Not to denigrate, obviously, downsizing of teams. There's obviously human consequences with regards to that. But as Andrea said, these people are very, very well equipped. They have incredible CVs, incredible track records. That they will be able to find new roles, whether or not in the bank, if they find a sort of lateral move, but somewhere else.
Yeah, but so I would see. So look, the banking industry to me is, let's set aside investment banks. Yeah.
Mhm.
But generally the banking industry is more of a follower of trends. And
Mm,
so I would expect here corporates and really emitters or RE100 companies to actually set the trend and set the guidelines. And it would be nice to see regulation be more acting in harmony across jurisdiction towards the certain goal that the Paris Agreement, has set merely 10 years ago already.
Yeah.
So I see banks more as a follower because they are nothing else than a facilitator for business opportunities.
mm,
So yeah.
yeah, very well said. And I would agree with you on all points there. So I guess moving over to our next topic, which
Mm.
is slightly correlated, and I think this, on the topic of private equity, I think this would be a good segue, and I'd love to get your perspectives on this, Andrea. So
Sure.
the news story
Andrea,
is that private equity.
can you see that he's basically curating the stories to your level of expertise? Ladies and gentlemen, this man has been 25 years in finance and specifically coming from
He's
private equity as well. So he's tailor-made it for you. So you're going to hear a lot
very
less from him.
overcredited, so thank you. But by the way, I love the two stories that you sent me, Ed. And quite frankly, I missed them on Bloomberg. And
Hmm,
this is my absolute favorite news channel for me.
All right,
yeah,
so ask your
yeah.
questions, Eddie.
Well, all right. Well, let me set the scene. Let me set the scene first. So,
Okay.
I mean, you guys have been around for a while. Not calling you old or anything, but
He's calling us old.
A dinosaur. He's calling me a
you
dinosaur, Rene.
you guys have been around to see clean tech 1.0. So that's
Mm.
what we're going to dive into, right? So the renewable energy sector has been booming for years, attracting trillions of dollars in investment from private equity firms that are eager to cash in on this clean energy transition, right? But now those bets are fizzling out, right? And it's leaving some investors scrambling to cut losses, write down assets, and offload underperforming companies. So private equity giants like BlackRock and Riverstone Holdings are facing major setbacks as wind and solar, electric vehicles, and energy storage startups that are failing to turn a profit. And many of these investments relied on subsidies and government support in their early stages, support that now may be at risk. And as a result, valuations have plummeted, with some investments being slashed to zero. So this marks like a very stark shift from the peak of 2021 and 2022, which was fueled by the Inflation Reduction Act, with billions in tax credits and incentives. But high valuations and cheap debt and speculative bets created an overhyped market, leaving investors exposed to this harsh reality. And I think this feels like history repeating itself. We saw with clean tech 1.0 in the early 2000s, when many VCs and startups were cashing in, raising a ton of capital, and really driving the first kind of social entrepreneurship agenda with clean tech. Valuations were getting pumped up, but they really underestimated how hard it is to build enduring, long-term energy businesses. And only a handful survived, such as Tesla, right? And then Clean Tech 2.0 brought another wave of optimism. But now, in what seems to be this downward cycle in Clean Tech 3.0, we're seeing investors pull back again. So is this just another short-term market correction, or are private equity firms losing faith in the clean energy transition, right? Love to hear your thoughts.
So I think this is a great question. I think it's not really related entirely to renewable energy sector. It's more related to the private equity business itself. We're coming out of 12 years of absolute lethargy, where corporates have been piling at unreasonable amount of debt at incredibly cheap levels. We were used to 0 to 50 basis points of interest rates for a very, very long time, and as such, for private equity firms, they have been able to bank on it. That's why real estate has flourished. Real assets and valuations have ballooned, but more importantly, we have been in a yield depressed environment from maybe 2018 onwards, and private equity firms started to scratch around and try to find, okay, what's the next sort of big jewel in which we can we can put our hooks on. And frankly, you said as well something quite wonderfully. You mentioned a private equity investing into a play that is mostly on startup companies that weren't even generating revenues. That's a CV play. That's very unusual that private equity firms have even moved into that.
Yeah, they didn't stay in their lane. They jumped the shark, effectively going into VC.
Which, quite frankly, why not, right? Because at that time it kind of made sense.
Yeah, but like you said, in 2021 is a different reality, right?
Yes,
there was so much liquidity in the system, and the Inflation Reduction Act only helped to stimulate that even further, right? You had quantitative easing, you had so much free money basically in the system.
Helicopter money.
Yeah, exactly.
So to cut the story short, so it's basically on the back of 12 years of cheap capital that took government incentives for granted, and valuations therefore were quite inflated. You have not only seen that in renewable energy companies, EV companies, you've seen that everywhere across the board. If you want to see the biggest flop in recent couple of years, take real estate, especially corporate real estate. Look at offices. Since COVID, it's taken quite a beat, and there's a lot of repurposing around that. So the real estate sector has been in absolute dire need on reevaluating their targets. So I don't really think this is specifically on renewable company. I think it's just private equity having bought at just overvalued valuations. And let's look at the ones that were mentioned in your in that wonderful article. You had the renewable company Solar Zero. They experienced operational issues with an ill-managed business model. In any kind of industry, you would actually face challenges. The same thing with the EV battery company. Yeah, the defaulted Canadian EV bus company's line and a Swedish EV battery manufacturer expanded themselves too thin, way too thin, and basically succumbed to overwhelming cost due to unexpected revenue delays. Right, so they were basically telling me that we can't operate just because we're not receiving enough funds quick enough. That to me seems like they've tried to take a bite that was a bit too big, and they were just way too greedy. So the peculiar thing, right, is that all these problems are topical, but rather associated to adverse movement on yield curves, political risks, so meaning Trump, alongside probably bad managerial decisions, and less than to the actual industry. Actually, quite interestingly, I don't know if you've done that. I actually went onto the U.S. electricity market and have looked at electricity prices, and quite frankly, since 2020, it's only going up. So if they would have actually purchased it quite well, they would have been capitalizing on such electricity prices, and paired with overly falling renewable energy costs. So because if you go anywhere else, they say, thank God we've got renewable energy, because it's actually in the cost wise is a lot cheaper than alternatives. So So I think there will continue to be interest from money houses, and we have just mentioned that before, and that's I think the reflection that the industry continues to be attracting capital.
Yeah.
Does that make sense?
Yeah, that makes a lot of sense. And it almost seems like it was a bit of FOMO, the fear of missing out, right? That's kind of how
Yeah, but
the emotional
everywhere,
aspect.
absolutely, Ed, because you have to think
Yeah.
about that that private equity
Yeah.
firms, they have a finite life, their funds, right? They're generally 5-year funds. They need to deploy quickly. They like to have a ballooned amount of assets under management, but then they also have they need to deploy. Right. So if you have, what did we read? If we have $10 billion to deploy, and in a market where you have difficulty of finding targets, and you're not the only one, everyone's got this problem. Which means actually you've got way too much capital at disposal, way too much dry powder for the same opportunities. Of course, valuations will go through the roofs. It was a perfect sale moment at that time for anyone who was holding an asset.
Yeah. It's reflective of this old adage, right? That timing is equally as important as the actual, targets in terms of that are being invested in. To Andrea's point,
yes.
Well, just the rising tide raises all the boats, and so effectively it's just a bad timing. When you look at the VC, I think that when we look back at the VC vintages of 2020, 21 in particular, that many of those marks will be downgraded. In fact, many of those funds that raise money, then I think the LPs are expecting essentially write-downs. It is what it is.
Yeah.
Right. But moving forward, there are going to be opportunities. There will be distressed assets. There will be other private equity firms. There'll be other investors that get the step in. Andrea, you mentioned, commercial real estate. That's a perfect example of a market that just has seen a fairly anemic demand and effectively now write-downs.
Yeah.
The banks who are holding those loans will be looking for to do fire sales in most sort of
no doubt,
most situations, and they'll be willing buyers that can then repurpose, as you said, and if they can, with requisite permit zones, etc., maybe repurpose it to residential or repurpose it for other means. And that's just the cyclicality of markets. Sometimes you come in at the top and then you catch that falling knife, or you come at the bottom and you ride the wave up. But sometimes you just kind of tread water, right? So it is what it is.
Yeah.
I don't like making too much of it, but I think that these overvalued, overinflated valuations led to that result. I think the dependency on government subsidies was a key issue, especially pointing to the Inflation Reduction Act, and now with the change of administration, that's essentially now unwound. And then to Andrea's point, I think the real kicker here is those tighter financial conditions. It's a change with regards to the prevailing interest rates globally, certainly within the US context, and that all adds up to sort of a reassessment and revaluation of those portfolios. So that's kind of the piece there. The final thing that I'd say is that the energy transition is underfoot. All right, there is a voracious appetite, and I keep saying this, and I kind of should find a better soundbite, but voracious appetite for energy. And you looked at the pricing data with regards to energy in the US. I'm curious to see, how much of growth that's coming from data centers. I can guarantee you that the private equity folks are
Yes.
very long
We're
private.
moving into digital environment.
Yeah,
I mean, AI itself, there is so much more requirement for electricity in the future. Sorry, I cut you off there. But yeah, I couldn't agree
No,
more.
no.
no, but that's exactly the point. You read my mind. So, as you build
Yeah.
out these data centers, as there's greater and greater appetite for energy, it's going to come from all energy sources. Renewables make the most sense today with storage, subject to obviously cost
Yeah.
variables. I posted something on LinkedIn the other day around nuclear. I know, Eddie, it's an area that you kind of also have in terms of consternation in your mind around why isn't nuclear more popular? It's a fairly clean form of energy, subject obviously to the waste component, but that's heavily regulated, tightly regulated, and managed through very, very strong processes. And it comes down to
Yeah.
NIMBYism, right? People don't want it in their backyard, right? And there's an association quite that's phallus with regards to nuclear power being the same as nuclear bombs. And obviously the Chernobyl incident and then Fukushima in more recent memory make people very, very cautious around the impacts of nuclear, and then they look at it not as a viable source of energy. However, I don't think that the build out, let's say, of AI is going to be exclusive. They're going to look at all forms of energy. Quite frankly, they're agnostic, depending on
Yeah.
cost and reliability, right? And it'll be multitude of different sources to build it out. And so, I think from that perspective, the energy transition's underfoot. There's going to be less investment in
Yeah.
coal, less in oil and gas, and then kind of ramping up the value chain as you get to greater efficiency, lower costs, and lower debts, lower pollution. That's the kind of the broader thesis.
If I can
No,
just add
Rene.
something on the sustainability side, you mentioned, it's underfoot. So I went to an S&P oil and gas conference that had a carbon angle. I think it was 2 years ago. And afterwards, I went to TechCrunch here. I think it was TechCrunch or something similar.
It would have been
Forgotten the name.
epic. The
Was it?
S&P epic.
Yes, APEC,
Yeah.
correct. Yes, yes. So it was very interesting to see the average age of participants in the oil and gas industry. It was impossible not to notice. And then the sheer difference when I then moved towards anything that was tech related, towards a week later, probably the average was at least 20 years difference. And
No
that
surprise.
basically tells you, no, not surprised at all, but it tells you literally where the industry of fossil fuels is going.
Yeah. And where the
We're
talent
still heavily
is
dependent.
shifting
I do
towards.
agree that there is this transition. Sorry, got it out.
Mm.
And obviously that's the long term sort of
Yes.
direction of play. But I do want to make it evident that the global economy is addicted to fossil fuels.
Oh
right?
yeah, absolutely.
It's part of everything from
Yes.
petrochemicals all the way through to energy and
Yes.
plastics and you name it. And you take a look around your house and you see that such a significant quotient, I don't even put a percentage, is from plastic, right? And from petrochemicals. And they have really important benefits. And the energy density, when I
Yes.
look at it just from an industry sector that's close and near and dear to my heart, aviation, the energy density is the key component, right? It's portable. You can fill your planes up, and the energy density enables you to have sufficient thrust. Try to replace that with hydrogen. The energy density is just not there. It's just a molecular level. It's just a physics thing. And so hydrocarbons have carved out for the past century and a bit a really important role, and unwinding that's going to take longer than what people expect.
Yeah.
Very well said. Very well said. And I think, on the discussion of power markets, I had the opportunity to work at a very large wind and solar producer in the U.S. Within the U.S. power markets.
Just name drop
And
it,
it's
Eddie.
clear.
You're wearing the
NextEra
Velaterra logos on you. You're name dropping in the background.
NextEra Energy, loved it there. And I mean, one of the key trends was obviously they're building out this battery storage division and then this data center capacity pipeline, right? And that's one of the main issues with renewable energies today in the US is that the grid infrastructure is far too old and there's not enough battery storage to actually keep the energy that's being produced from solar and wind and hydrogen, right? So with the sheer amount of electricity that's needed, from this AI transformation the next 20 years. It's set to quadruple. You need sufficient battery storage technology to actually make renewables valuable, because when the lights turn on and everyone comes home at 7 p.m. 9 p.m., the sun isn't shining. So if without battery storage, there's really the natural gas plants and the coal plants have to turn back on, right? And that's why we're seeing, like you said, big bets on nuclear. You see Sam Altman at OpenAI, they're investing a ton of money into nuclear fusion startups, and I think that's going to be a really big player for this century, right, in this energy transition.
Let's hope so, Eddie. Nuclear fusion, everyone's been trying to bet on for a very long time. It's an easy way to be disassociated from your money, right?
Yeah, I mean, I think we
it's a
just
very
saw
big bet.
Scientific breakthrough this past week on another end. I just saw a recent article in France, scientists in France had gotten this nuclear fusion reactor to go for, I don't know the right term, but to basically operate
like
for
1
22
second.
minutes.
All right, okay, great.
No,
So then now
22 minutes.
commercialize it.
It's the longest in history.
No, that's great. And I think harnessing the power of atoms is amazing. I really think nuclear fusion is great. And when humanity unlocks that genie, it'll be transformational. But we've got a long time before it gets to commercial endeavor. It's like, I think that there's a hype cycle with new technologies, not to denigrate them. We need that innovation. We love innovators. We want to see that. But there's always a lag in the real world from going from in vitro, like, in the lab, to real world implementation. And you see that for everything, for chemical engineering, through biotechnology, through plastics and metals and chemicals, and just getting things to market takes a long time. Something like fusion is a big undertaking, but again,
of course, fusion. But yeah, I mean, France has, if you look at the difference between Germany and France's energy stack, France has much cleaner electricity because of the
No
nuclear
doubt.
plants that
No
they
doubt.
use. And
I think it was a big mistake that Germany, from a geopolitical and security perspective, unwound their nuclear assets. They're still recovering from that. And I think that it'll have detrimental impacts with regards to industry. I think we're starting to see some of that with increased costs, the lack of security, and the dependence on Russian gas pipelines coming through. Clearly, that bet hasn't materialized so well, and with sanctions, etc., now placing those pressures. The cost of energy being high is detrimental to a thriving economy. And so economies that have lower input costs with regards to energy will tend to outperform those others. It's just pure economics.
Yeah.
But anyway, we're deviating. Let's get back on carbon,
we can dive pretty deep into those topics for the next few hours, but let's segue back. You did mention the airline industry, and I think this is a story that I want to touch on that came out this week regarding Southwest Airlines, a company that once positioned itself as a leader in sustainable aviation. They've abruptly, cut key climate teams and are looking to sell their renewable startup that it acquired just last year, right? So last week, 7 out of 10 employees working on Southwest's climate strategy were laid off. The airline's also shutting down its team responsible for investing in SAF, sustainable aviation fuel. And these cuts are obviously a part of the broader layoff of over 1,700 corporate employees, which is actually the first in Southwest's history, driven by pressure from activist investors to improve financial performance, right? So I think this is a setback for the aviation industry, especially given that airlines globally are struggling to make progress toward their climate commitments. I mean, it's only hard to abate sector that has a net zero target. And Southwest had pledged to use 10% SAF by 2030, but so far its usage is less than 0.1%, significantly behind the industry average. And while airlines are being relied on to voluntarily reduce emissions, there's a lot of major carriers backtracking, and some governments, such as the EU and UK, ramping up mandates to use cleaner fuels. And there's a lot of critics that argue without stronger incentives that SAF won't scale fast enough to meet these industry targets. And I completely agree, right? I mean, in the US, we see a lot of incentives behind SAF uptake in Illinois and in California. And there's a kind of a stick and carrot approach, whereas in the EU and UK, there's kind of just a flat tax or just a flat mandate, right? So with that said, I'd love to start with some first reactions on how this news lands for you. And are we seeing a broader trend of aviation corporates, pulling back on sustainability goals when the financial pressure is mounting? And love to hear your thoughts on that and opinions overall on the SAF industry going forward, right, as a viable solution.
That one's directed to me, right, Eddie?
Well, whoever'd like to go, yeah, Rene.
I'll jump on this grenade one first, Andrea, and then you can feel free to
Go
provide
ahead.
color. Let's switch roles. No, Eddie, I like how you framed the questions, by the way. So this is really good. I think the reporting has a certain bias, and it's evident but when you read it, right? Again, the Schadenfreude angle. Oh, it's targeted towards sustainability. It's not. This is a reflection of economics, and essentially, you touched on it. Let's provide some context. Sustainable aviation fuels are drop-in fuels that have the same molecular structure to fossil-based fuels, except they're created or generated through renewable sources. There's a bunch of different feedstocks and pathways that get you to that outcome. However, the economics don't stack up today. And this is, again, part of an evolving technological cycle where you start to see compression as you start to see greater demand and you start to see kind of implementation. We saw that with renewables, well-defined. But SAF was so early on in the innings, and it's very, very difficult and very costly. It's 3 times roughly the Jet A costs. And I think that's really the big key. So you touched on, I think the numbers just don't lie, Eddie. Again, people can have opinions, but numbers don't sort of lie. And you mentioned this ambition that many airlines, Southwest is not alone. You can name all the US carriers and European carriers and other large international state-owned or very large carriers have commitments to increase and ramp up their sustainable aviation fuel components to, let's say, 10% by 2040, right? Today, they're at between 0.3 to 0.2, like 0.2 to 0.3% of their total blend is SAF. It's uneconomical for airlines to ramp up and to do so alone. The key metric here is revenue destruction, right? One airline does it and the other doesn't. The other one that didn't effectively undercuts them. It's a cutthroat market. And they're basically operating on razor thin margins. Something like that results with a loss of revenue on that fare, effectively, that is being issued. And so, whilst many airlines, and we had a conversation with one yesterday who's very active in the space, perhaps the most active, and I've asked her to come onto the pod to talk about this specifically. She's a global expert on SAF. Said quite frankly that despite all the investments that airlines are making and banks are helping to facilitate as well, it's a very risky play. That they have an ambition to provide the offtake. That's what guarantees the loans, essentially, to go out there and build out that infrastructure. But it is very early on in the innings, and they need political tailwinds essentially to help to stimulate these markets. So back to the subsidies piece, right, that we had in the previous conversation around renewables and previously. That's what the SAF market's looking for. So today just doesn't stack up. And I think that this Southwest announcement is just a sort of allocation of resources and priorities, unfortunately. And Helen, her team were really amazing at Southwest. We had the privilege of working with her in the past at my previous organization, known the entire team over some time, respect them and obviously their colleagues of other airlines that we've worked with. And they're held in very high regard and esteem. The airline industry is just a difficult one to decarbonize, as you laid out, Eddie. It is the only sector, thankfully, that has this net zero commitment, and SAF is one of 4 pillars. Carbon markets being another, technological and operational efficiency being the others. They're doing their very best, but given the dependency on getting people from place to place and being 95 or 98% of their emissions coming from fossil fuels, it's just a really difficult one without either input costs of fossil fuels increasing, a carbon price that effectively closes the gap between that SAF premium, or stimulatory policies that effectively compress the cost of SAF. And right now, it is very difficult for them to reach those targets. Andrea, any insights? I know you guys work quite closely with a lot of airlines in the compliance markets in Europe in particular.
I think you actually said everything already, and you hit the nail on the head. The article was very well versed and a perfect example that regulation isn't doing enough.
Yeah.
The fact that Elliott exploited capital inefficiencies is a good example for inaction from governments, or at least governments non-acting in concert. And capital will always exploit it because that's a good thing. Otherwise, we become stale. We need that sort of challenging thinking process to get better and become better. I would not expect that the reliance on purely NGOs and goodwill of corporates, especially during turbulent political market times, is scalable and future-proof activity. And yeah, I mean, it's also remarkable how regulators are thinking very much in a ones and zeros response. They have done such a good job in Europe in bringing in per certain industries, and within the rolling in of the EU ETS. I just don't understand why we can't do that in an equivalent manner for SAF.
Well, I think that there are, like the European Union and
yeah.
the UK are trying to mandate the certain amounts of SAF, and I think Singapore's doing a similar thing, and more regulators will start to mandate that. It then becomes a question of, it's still like, okay, if there's a mandate, that means everybody has to essentially adhere to that mandate, and effectively it creates that bare minimum that all the airlines then comply with. That's got an inflationary effect with regards to the ticket prices. And you don't then have that zero-sum game that the airlines are playing with one another, right?
Oh yeah,
I'll go ahead and do this, and then the other one's just, I won't. I'll just keep undercutting you until you lose market share.
No, I was maybe not being very, very clear.
But I like the per. That was cool. Did you guys catch that? It's a Francophile for a little bit to little bit.
No, it's no. I see what you mean, and I couldn't agree more on that angle. What I'm saying is, SAF production shouldn't be this expensive. SAF production
it is because
should
it's
be
coming from
faster.
waste products, and then there's competition for many
Yes.
of those waste products, and so it's not in a
Correct.
vacuum, right? It's just like the
Yes.
same way, kind of bringing it back to the carbon lens. There's this misconception that many airlines have that CORSIA eligible units, emission units, EEUs, are only intended for the purpose of CORSIA, and therefore the only buyers are airlines. And when we had the
That's
pilot
true.
phase emerge, and obviously airlines were grounded, and so that the demand didn't emerge, but the traders went for it, and so did many other corporates. They saw the ICAO stamp of approval as a high watermark, and for these traders, and there was so much appetite for them that we saw a natural constraint in that space, and airlines were effectively thinking, oh, is this a prelude to what we're seeing in the future? I think the answer is yes. And I think that what we're seeing from this SAF piece, if I can just kind of tie both of those together, is SAF demand is disappointing. They have an ambition to scale, but the economics don't let them to get there. I think that that'll continue until you get mandates to implement minimum requirements. And so when you look at it from decarbonization lens, airlines have already exhausted many of the operational and technological efficiencies. Operational is just like, e-taxiing from the gate, stop burning fuel on the ground, keep it up, in the air, and then better scheduling, all of these sorts of stuff. The technological bits are evolutionary with regards to the fleet, and you only replace your fleet every 10, 15, 20 years, depending on how quickly you do retire those planes, and you refurbish them and you repurpose them with more efficient engines. So these two verticals take a lot longer. So back to the crux of it. Vertical 3, carbon markets, is a key and core pillar of the aviation decarbonization story. And I think that this kind of swings the pendulum back in the carbon market's favor. And I think from a CORSIA lens, I think that will be certainly stimulatory, where airlines weren't never going to use SAF to meet their decarbonization objectives under the CORSIA. It just was too expensive, and it was used purely as a marketing piece and are trying to bring the industry forward to a longer term trajectory. And so I think, from a carbon perspective, I think that's a bonus. And from an economics perspective, that makes more sense. Decarbonize at the lowest possible cost of emissions, right? And SAF is somewhere in the $500 to $800 a ton equivalent in terms of costs, based on the cost of SAF at the pump. Versus offsets far less than that. We'll see somewhere between 15 to 25, right? Best estimates per ton. So it's just economics at play.
Yeah, but
what if there were some incentives actually that render SAF more competitive towards jet fuel?
That's a great question. You see that in other renewable fuel markets.
I just don't see why
like in
that's
California,
never
like
been the
LCFS.
case.
Well, I think that'll emerge, quite frankly. But again, like, okay, let's take it back to the private equity conversation, right? Now, businesses that are getting essentially, they've been VC funded, they're taking the risk, they've demonstrated the potential, and now there's this forecasted huge demand. They get the stimulatory components from the governments, and like in terms of concessions or whatever it might be, rebates and other sort of stimulus. But then what if the market's not there? And I think that Neste, which is one of the largest, comprehensive fuel providers, but very much so a big player in SAF, they're on record saying that demand from airlines for the pricier low carbon fuels, right, SAF in this case, have been disappointing. So even though,
of course, it's double the price.
But
it's double the price. Yeah. So
I think
it's in a low margin business. Air carriers are a low margin business. They're literally scratching around the euro. They're trying to, and I would probably do the same. Trying to offload the cost on passengers, and passengers, of course, they don't want to pay for it.
Passengers already pay for it in a lot of ways, right? There are costs associated with security and docking fees and all this sorts of stuff that gets put into levies and other components. I think SAF, and you're seeing that here in Singapore. Again, I'll invite our guests on, expert panelists to come on and talk about SAF. But she mentioned that yesterday to us that Singapore is bringing something like that in, and essentially you'll see that on the ticket stub. That is, I guess, people don't want to see things being passed on to the consumer. Guess what? It happens all the time. Banks do it. Telecommunication companies do it. If you bear a cost and everyone bears the cost, you pass it down to your consumer, and the consumer either accepts it or doesn't accept it, and they terminate the contract essentially.
Yes.
So in this case, it's just part of that transition. We all benefit from a transition towards cleaner fuels. So let's just be very adamant about that. And I think that we need to see that stimulus. And we saw it with renewables. There was a lot of support for these technologies in the early part that really got them over that curve. And then we started to see pressure with regards to price, deflating that price down because of scale, right? So you need to overcome that scale hurdle as well. But initial stages, you need a lot of support and finance from governments to help you to get off the ground.
No, I think also you mentioned something quite peculiar. I wish, quite frankly, that general governments all across the world will be a bit more proactive, similarly to the engagement that we've seen in Singapore, the engagement that we've seen to some extent Europe. I think they're definitely a bit of on a leading side on.
I get it, but it's hard to be a leader, right? Andrea, you know this full well.
It's
being
very
a leader
hard.
is a lonely and difficult situation, and over time, if you are successful as a leader, and Singapore has a track record of great leadership, starting with the founding father of modern day Singapore, with Lee Kuan Yew and his pragmatic approach. So Singapore sees an opportunity, but let's play it based on devil's advocate kind of approach. Singapore doesn't have natural resources, right? It is a construct. It is a hub. It is a wonderful place to live and to raise a family. Very dynamic and modern and very entrepreneurial and innovative hub. Okay, other countries may not have the requisite revenue base that Singapore has on a per capita basis. It's also slightly easier to manage a city-state than an entire continent, a la the United States, where you have federal and then state, and you have such a dynamic population. Apply that to India. Apply that to Europe. Apply that to Sub-Saharan Africa. The construct and the difficulties are different for each country. And so whilst they might be aligned ideologically around certain transitions that are important for humanity, a la the United Nations Framework Convention on Climate Change, the implementation part is the difficult bit. And that's why the Kyoto Protocol did not succeed, because it had this north-south divide with Annex 1, Annex 2. And now the Paris Agreement has this common but differentiated goals approach, essentially saying, hey, here's a common goal, but your approach to it will be different. And I think that that's a celebration and recognition of the diversity and the differences that different countries have. And the final bit that I'll say there is we can't expect governments to carry the burden or the load independently. The private sector plays a key component with regards to facilitating this transition. And that's just because governments, A, don't have that centralized control unless you live in an autocracy, and no one really likes that. And the other thing is that they have finite budgets, driven in large part through tax revenues. And so no one really wants to have a large government. The US election results just show that. Essentially, it's an unwinding of large government influence and a reversion back to sort of leaner, more efficient government. And nobody in the world likes to pay more taxes. And so that constraint remains.
Okay, but let me come back to you on that one, because
maybe the Norwegians like to pay high taxes.
no, so I agree with you. No one, I agree with you. No one wants us, an overly burdensome, overly bureaucratic government, that imposes here and there more stricter rules. And
I do agree with
Italy? Never. Especially efficiency.
Sure, efficiency questionable.
Yeah, but no, I mean, look, just to but I do agree with you. No one wants that. But on the other end, we are seeing right now that expecting corporates to do it, corporates would always go towards the more profitable alley. And so, which means if you want them to go towards profitability, you need to tax the hell out of them if they continue to operate within a certain spectrum that nowadays is less regarded. And I think that's maybe a bit similar within the UETS system. I don't know if you fly with SAF, you're going to get XYZ incentives, or there will be a certain proportion of funds available if you do XYZ. And look, I think the creativity here is quite large. Frankly, if you give a corporate the ability to either go with jet fuel or go with SAF, which is, by the way, double the cost, and I'm looking at 5% margin of my business, I'd always go for more shareholder value. So I always go for jet fuel. Everyone will do that, and expecting a corporate to do anything different, I think is nice to have if we have an abundance of capital, and we don't have that anymore. So
well said.
That's well said.
I think both angles can be defended. It's not an easy answer, especially when we've got this wonderful Paris Agreement with 195 counterparties now that have
way to stick the knife in.
that have decided to act and to move into a certain direction, and that is unprecedented. And it is tough. It is not easy. And as you rightfully say, a lot of governments have, some governments have it a bit easier than others, and maybe, but sorry, not maybe. I'm actually very optimistic that we are going to get there.
Can I just so you stuck the knife in? Can I just read the group that the United States finds themselves in right now?
Yeah.
Because a lot is being made around Trump pulling out of the Paris Agreement.
Yeah.
It's an isolationist move. Obviously, it's deleterious to the broader agenda. But let's just say here's the group of four. It's the United States, Iran, Libya, and Yemen that have not fully joined the Paris Agreement or have exited the Paris Agreement. Great club.
I think, look, I don't really see the United States really gaining long-term, market viability and kudos from its allies being an isolationist. I don't know if you never mind. I'm gonna go on.
But both of you and I are believers in globalization. Anyway, we've diverged. Eddie, back to you.
Yeah, you've diverged into.
Sorry, I think Eddie tried to say something quite a long time ago.
I know. We just cut him off.
Yeah. I mean, it's long gone by now.
Just wait till I get Stephanie Zhu and Rohini Sengupta on the podcast, Eddie. You will not be able to get a word in.
SAF back to Trump. Everything always goes back to the.
Now let's move on. Let's talk about good news stories. I think you had something on the docket around the BCM.
I mean, definitely. Are you? Let's move on. Am I gonna be let able to move on, or do you want to keep going? No, but okay. So one interesting story that I thought, just I wanted to get your brief opinions on was that there's a tiny island nation that's selling passports to fund climate resilience, right? So a little bit of a segue here. So as sea levels are rising, extreme weather intensifies, small island nations are facing a crisis here, and they're not going to wait for the world to save them. So the Pacific island nation of Nauru, or yeah, I believe I'm pronouncing that right, Nauru,
Yep.
has launched a strategy to sell citizenships in an effort to fund climate adaptation and relocate its population away from the flooding prone areas. So the plan is to raise $65 million through citizenship sales to fund the first phase of this mass relocation project. So about 90% of Nauru's 10,000 residents will eventually be moved inland to higher ground. And the cost is that foreigners can buy an Nauru passport for $148,000, granting visa-free access to places like the UK, Singapore, Hong Kong. And the program is expected to generate $9 million in its first year and eventually bring in $68 million annually. So I think that kind of highlights that, some of the wealthiest nations may be, failing to provide adequate climate financing adaptation for these vulnerable countries. So they have to find their own strategies, right? And I think this is just the state of the overall industry, right? So the big question is this an act of climate leadership, or is it a desperate measure exposing global climate injustice? I mean, what are you guys' thoughts on this in general? Don't want to go too deep into this story. Just thought it was quite interesting to see, as this is a first, something that we may see in the future for, a lot of, I think Indonesia is the 5th most populated country in the world with over 300 million people. And they have a lot of small islands that may not, a lot of small islands that, with sea levels rising, there might be mass migration in the future from this. So what are your thoughts?
So frankly, it's a bit of everything. You can color it how you want it. Is it the expectation of wealthy nations to support? Some say yes, some say no. Is it going to be helpful if wealthy nations continue to support without any, let's say, counteraction? I'm not sure, because at the end of the day, who helps themselves has a much more viable solution. The best example, actually, again, back to Singapore, if you look around, they have turned around in 180 degrees. They've become the highest GDP per capita in the world within 50 years. And they were literally kicked out of Malaysia in the 60s. They were in a very difficult position. And they've maneuvered themselves all by themselves, out of a problematic situation. Yeah, of course, if we need an extensive amount of funds, there might be a way in which globally countries will support. But you can't expect that leadership out of the West or developed nations will lead the way, because otherwise there will never be how can you say, there will never be independent thought associated to how to get out of a very difficult and dire situation.
Yeah, well said. So I think that, to answer your question, Eddie, it is an example of climate injustice and a reaction to this existential threat posed by climate change, especially for small island nations and states. The investment, citizenship by investment, is not a new concept. I think that there's 20 plus countries globally that have such a program. They're highly sought after by different types of individuals, right? Depending on the jurisdiction. And some have their merit. Some people believe that having multiple passports is a hedge against future, calamities, etc. Right. But it's a fairly small revenue generator for most countries. And I think it'll be fairly small for a country like Nauru. But I like the symbolism, as you said. Essentially, they're saying we're sinking. It's a small country with 10,000 people, and effectively they're being dispossessed as a result of actions beyond their control. And I think that that goes to the climate injustice piece. I think I love the way you framed it, Andrea, but I don't know real sort of wherewithal to withstand climate change in terms of from a climate change resiliency perspective, let alone play their cards as a Singapore had, from the 60s. I think it's a different playbook. The way that
Definitely.
Singapore is also blessed in a perfect geography between east and west, with one foot in the east, one foot in the west, and as a historical and meaningful trading hub. And they leveraged that to their benefit and then attracted a lot of investment, firstly with regards to manufacturing and lower cost labor type of opportunities, and then to technology, electronics, etc., and then to become a financial powerhouse of the world. It was a step up effect. I think for Nauru, it doesn't go so well.
Yeah, that's very true.
Yeah. All right, well said. So
can you give us a little bit happier tone, Eddie?
Yes.
For the next
we're going to move on to more of a VCM, focused segment or story.
Yay!
Yeah. More market analysis and market trends that we're seeing to end off the pod today. So with regards to the VCM trends this past February, as a whole, we've seen 750 plus buyers this month, 14 million plus in matched retirements, with an estimated notional value of over $88 million. The energy sector dominates retirements with over 90% of the market, followed by financial services and consumer services. Almost half of all retirements came from forestry and land use projects, followed by renewable energy. And looking a little bit deeper into the market data, we can see that the Italian energy giant Eni has purchased nearly all available vintage 2021 Red Plus credits from the Mine Dombe project. And Eni's purchase also includes almost all issued credits from Mine Dombe, VCS 934, and all available 2020 and 21 vintage credits from the Makame Savannah Red Plus project, VCS 1900. So, I think that's an interesting development. Eni has retired 5.9 million credits this February alone, making it the leader in retirements this month. And this also comes at a time when Red Plus projects are under increased scrutiny by the media, and particularly regarding credit quality and permanence, and an overlap with just jurisdictional carbon programs. So, does this raise some questions? I don't know. Let me hear you. Let me raise the questions to you guys, the market experts here. What are your thoughts on?
I'll chime in and then give the last word to the Italian to comment on an Italian company. How's that?
That's good.
So when I look at the numbers, and shout out to Allied Offsets, I think we at Valterra are really big fans of what they do. I think their analysis is great. They effectively ingest and then interpolate the data that sits on the various different registries. So it creates a centralized node for data analytics, and they do a really, really good job. As it relates to retirements, let's take it from the top. I think it shows resilience in the market. I think having such a strong month for retirements, 14 plus million tons retired, shows that the market is still very much alive. It shows that corporates are still retiring credits, but maybe they're not doing this song and dance about it. I think the second bit is, and we can get into dynamics around the specific projects, and we can talk about Red Plus in particular. I don't want to kind of focus on specific projects per se, but let me read to you the top 10 retirers that are publicly available here and via the Allied Offsets data set. Eni, obviously petrochemical energy company out of Italy. Shell, name says it. Terpel, Primax Colombia, Woodside, Biomax Combustibles, Lenovo, Disney, Petróleos de Milenio, and JP Morgan Chase. I read 70% energy companies, right? And many of those are in Colombia, right? Let me just count them. Yeah, 4 from Colombia, right? So they have a compliance obligation under the Colombian carbon tax, and the rest are global, right? And so it tells us compliance markets are still a key driver. It tells us that energy companies are committing and remain committed to their own decarbonization hierarchy. They find it very difficult to decarbonize, and offsets play a key role. They've been, and they, Eni and Shell have been long-time proponents of nature-based solutions, and they're continuing to do that. Obviously, it's heartening to see Lenovo, Disney, and JP Morgan also participating and actively retiring. But what you'll find, I suspect, is a lack of press releases with relation to these retirements. That's one piece. And an anecdote, we spoke to a sustainability manager recently who said to us, every time we retire, I get 100 calls from other sellers trying to sell us stuff, but in particular media who are calling our teams and trying to get a quote to effectively ask us why we're buying these types of credits. There's this vitriolic sort of view really from media, and she says it's exhausting. They have an internal view that they really value carbon credits because it helps them to achieve decarbonization today, and also provide an internal carbon price so they can decarbonize tomorrow. I'm paraphrasing her words. And within all that context, I think that this is a reassuring and reaffirming sign for the market. Andrea, over to you.
I wish more companies would be like Eni. I think it's very much like that. I couldn't agree more. Negative press has been around there in abundance, and quite frankly, negativity is a lot more associated to clickbait. I mean, if you read what the press has loved to write about the VCM market is very absolute. It's to some extent also not quite accurate in their research. But admittedly, I'm very happy to see that corporates such as Eni have continued to do what they've said they would do. They haven't regressed from or receded from what they promised, and I hope more companies will actually see that through in a similar scale.
Yeah, I couldn't agree more. I think on that side, can I just make one last point? Sorry, Eddie. It's that there's the media vitriol around perceived lack of integrity, which is being addressed, and there were instances of real integrity issues, is no different to any other market, right? You look at it in countless examples, but I talked about our global dependency on fossil fuels. Well, there's incidences that are fairly regular where tankers of oil have accidents, and then that results with oil spills. It doesn't result with people stopping to use oil, right, for fuels because they're dependent on it. And with carbon, the Achilles heel is that the dependency is self-driven through voluntary participation, and ultimately then that leads up into compliance systems, and that's much more sticky. The media has this gripe with carbon markets that is very unhealthy, and they need to recognize that their gripe is actually leading to perverse outcomes. They're chasing away corporate buyers from taking action today, right, in the view of a perfection in the future, and then taking away the necessary tools. And I think that what these resilient companies are demonstrating is that, hey, we recognize that the challenges are real, and we're actively taking participation. They're not shying away from the broader decarbonization. In the case of energy companies, their core business is reliant on extracting these fossil fuels. So for them, it's a social license to operate, right? As they look to become more efficient, but they're not going to achieve a net zero commitment until they basically sell out these assets, essentially as stranded assets. So that's kind of the view. But it's really reassuring. Back to the market piece, right, Eddie? It is really reassuring to see consistent retirement emerge. I do think that some of those credits were sitting on books for quite some time, and so they're being retired. But that natural retirement, no, it's a natural evolution. I think that there's no causality between the day of retirement and then when those credits were purchased, because there's opacity within the market. So I do suspect that folks did acquire units over a period of time, and then they do an annual retirement, which is how the process works.
Yeah,
but it does create stimulus and demand for new supply to come into the market.
Yes,
and I think that's we're seeing that. Oh, can I say the final thing is red is not dead. Take that as a soundbite. Red is not dead. No, red is not dead. Red still plays a key role, right? There are so many benefits from a community and biodiversity perspective that are really well defined. yes, there's some issues with regards to ensuring that 1 ton is exactly 1 ton. It's a difficult and dark science and art to effectively quantify these emissions. Nature-based solutions are variable, they're dynamic, they live in the real world. There is blight, there are droughts, there are fires, there are floods. There's lots of different things that can actually affect natural climate systems, but they're really important source and asset to humanity and to our ecosystems. And then they deserve to be supported. And the perfection
Yeah.
should be embraced towards improvement. And I think we've seen that a long sort of trajectory to more embedded data clarity and dynamic baselines, et cetera, et cetera. And so we're iterating and improving. And I would just encourage corporates that would listen to these types of podcasts to to look at the example set by some of these corporates to just continue the course, right? It may be difficult. You may get some calls that are uncomfortable from media, but effectively they'll go and beat another dead horse eventually. And once we get tacit endorsement from the likes of this SBTI, then it becomes now de rigueur again to participate. Please do that now and build your internal capacity as opposed to waiting until later on. You will find that that'll be a much more resilient and willing and receptive is the word I was looking for, selling populace on the project side and intermediaries to engage with those components that have supported the market in the downturn.
Yeah, very well said. Very well said. So I guess to wrap things up for today, I want to just ask you guys one last question. Looking at everything that we discussed, what would you say is one takeaway that you hope our listeners remember?
What is the key takeaway? Yeah, remain optimistic. We have seen that there has been a lot of negative connotation associated to the market in which we work in. We do know the positive externalities that projects are generating. It's an unfortunate fact that there have been some key players that have been acting outside of the best interest of this market. And I think that the negative press will at some point turn into positivity when we have more rigor and more transparency and better action to quantify what is a carbon credit. Does that make sense?
Yeah, well said. Yeah, very well said. Rene.
Read the news but also discount the news, right? Like don't believe everything you read and just use your discretion to analyze it, right? It's about critical thinking at the end of the day. That's what I'd like people to think about, right? I'm not going to just pontificate about what I'd like in terms of waving a magic wand. Just use your brains.
Yeah.
Like people are really smart in this market, and I think I had this meeting just before this call, and one of the clients said to another partner, "Oh, it seems that this market is really complicated, and people coming from this very NGO slant with ideology, et cetera." And the counterparty said, "Actually, no, I disagree, and I agree with him." And his take, which is, no, there's a lot of people in this market that, yes, they're well-intentioned, but they're very data-driven with regards to their analyses. And I think that we need to encourage more and more of those people to speak up with regards to their viewpoints, because again, it's driven in large parts, not through ideology, not through opinion, as Andrea said at the beginning of the conversation. It's driven in large part to the analysis. So let's analyze it, right? And the market is moving forward. The market is improving constantly. We're chasing this North Star with regards to higher and better integrity and better quality, and we just continue to move forward. That's it.
Yeah, I would agree there.
Love it. And if I can maybe just add something to it, you mentioned read the news and just be vigilant and questionable. No, exactly. Take it with a grain of salt, especially when certain journalists have taken 9 months plus to arrive at a conclusion that generally takes probably an analyst 3 hours to put together. So there is, I think, a lot more questionable activities towards this market.
Yeah, well said. And I think from my end, if I were to just give one key takeaway, I would agree with you, Andrea, just to stay optimistic. I think the future looks really bright. I mean, there's never been a better time in human history to be alive, in my opinion. And I think the fear mongering from the media, kind of gets people in my generation to not think that. So I think it's important to recognize that, the future looks really bright, and stay optimistic. So yeah, with that said, thank you so much for joining us, Andrea. I really appreciate it. And Rene.
Glad I was on. Thank you very much for having me.
Yeah, excellent discussion. Thank you so much. And feel free to follow us on LinkedIn, YouTube, Spotify. Like, comment, subscribe, all three. Gotta give the plug
You
there.
forgot Apple Podcasts, Eddie.
Oh, Apple Podcasts.
What
Yeah.
else?
What else is there? No.
LinkedIn.
Yeah.
I said that.
Okay, good,
Yeah, we're
good.
not very good at this, like
Self-promotion?
social media. So no.
It's gonna come. Don't worry. It's gonna come.
It'll come. Anyway, thanks guys. Really appreciate it.
Bye
Love
bye.
you guys.
Thank you.
Likewise. Bye.
Have
Bye.
a good one.